Welcome to Dealmakers and Fakers, the podcast for founders, operators, and investors obsessed with raising capital. I am Niclas, managing partner of spectup. We have helped companies raise over 120 million US dollars. And capital markets are what I live and breathe. But this show isn't about theory. It's about the people who actually got the wire. In each episode, I sit down with founders, executives, fund managers, and VCs to break down how they really raised the money. The wins, the screw-ups, the red flags, and the deals that almost died. If you want unfiltered fundraising stories from real deal makers and maybe a few fakers, you are in the right place. So let's get into today's episode.
Perfect.
Going with the flow.
Congrats on the launch, and it's exciting to be here.
Well, it's just in the beginning because I really enjoy speaking to founders and people who tell me more about their business. The most exciting part about my job is probably having these conversations where everyone tells me about what problem they identified and how they are solving this. So I would love to know, maybe you can just quickly introduce yourself, what you do with your business, and then we can take it from there.
Yeah, sounds great. So my name is Jess Liew. I am the CEO and founder of Intriq AI, and we build autonomous AI agents for the consulting industry, primarily around their client data. And we expedite the process in getting them to their clients' insights with the power of AI. So that's me.
This is super exciting. And honestly, there's so much hype right now when it comes to AI agents. How is it going from a fundraising perspective? Because I think you mentioned already you had one funding round, and then you mentioned a little bit that you're already gearing up for the next round. So maybe you can tell me some details here. That would be super exciting.
Yeah, of course. Yeah, fundraising is a fun process, I guess. It's nice not to be raising right now. I will say that, and just to get a bit of a breather. We raised our pre-seed round earlier this year, and we're currently on our roadmap. We're due to be raising our seed at about Q2 of next year. So it's nice really just to be focusing on the business right now, focusing on our customers and growth, which is what the business is all about. Obviously, it's great speaking to investors when that pressure isn't at the doorstep too. And just when I have investor conversations, I also like to hear about, what they're seeing in the market, learn about kind of what they've been investing in lately as well. So I do use it as a bit of an informational dialogue rather than us just pitching ourselves the whole time. So it's nice being in that in-between period, even though we are fast approaching Q2.
I love this. And this is honestly also the absolutely right approach, because many people start fundraising when they need the money. But I think it's so much smarter to just see it as a relationship building thing in the beginning and speak to investors, let them know about what you are building. And then over time, they also see what progress you do with the business. And it's so much easier than to go back to them when you actually need to raise, because they know your name. They saw already what you did with the business so far and maybe what challenges you overcame during this time. And I think this is so much powerful because you come from a different perspective. It's not you are not in the need for the money right now. You can focus just on building the thing. So I love that.
Yeah, 100%.
Cool. So Jess, maybe you can tell me a little bit about your last funding round. I would love to know everything. So how long did it take, for example?
Somewhere between 2 to 3 months, I think, in the end. So yeah. Should I just dive into it?
Of course. I have a lot of questions. If you first want to just tell us more, then feel free to get started, and I will then ask during the chat. But I must say, 2 to 3 months, by the way, is not really a lot. I see founders typically raise for way longer periods. Of course, it depends always also on the business and on the industry, but I would say 2 to 3 months is a very good timeline in general.
Really? Okay. Well, that's good to hear, because it felt like it took us longer than we were hoping it would take us.
No, I don't think
Um,
so. So, how did you get started then? Like, what was your first step
yeah.
during these months?
How we got started is not how I would get started again. So, I guess just to set the scene, it was our first institutional round that we raised. We did, yeah, and I think how we started was with the spray and pray approach with, I think the mistake we made very, very early on was just not being targeted enough. And I see founders make this mistake even now. I just had an email this week where a founder asked for an introduction to an investor. And I looked at their deck, and after 2 seconds, I was like, they would never look at you for, yeah, I know. I just think people need to do their homework. And you waste a lot of time speaking to investors that don't, wouldn't look at you as it's not part of their investment thesis, not you as a founder, but just in terms of, what they invest in. But
This is
I think,
so interesting. This is so interesting. I have to tell you a little story now, just before we
yeah,
proceed, because
okay.
maybe you saw my post last week. I was actually in Helsinki on the Slush event. It was like a
Mm,
great conference, and I also met some very interesting investors there. So there was one guy. He works as an investor at a German bank, basically. So they do like a lot of corporate investors for the bank. And they are very traditional. So they have, of course, like a fintech background. They focus mainly on Series A because it must be like a company that is already quite major. Like they can't fund pre-seed businesses with the money from their
mm-hmm,
German clients, you know?
mm-hmm,
And he told me
mm-hmm.
a very weird story. So basically, at the conference, there was someone approaching him because he had this big badge that he's like an investor. And
Yeah,
everyone is basically then coming to them and they want to pitch them their business. And the person who then approached him, he put a lot of medical packages on the table and then said to him, hey, what looks best for you? And basically, he did it because that was his business. So he was building medical packages and tried to pitch to random investors he met at the Slush. And I just thought when I heard this, like, this is crazy. Like, you need to be targeted. Why do you go to fintech investors who work for a very traditional German bank? They have nothing to do with packaging or medical
yeah,
products. Like, I don't really understand why this can even happen, but I just needed
yeah.
to tell you this because I thought this is crazy.
Yeah, I mean, you see it all the time. And to be honest, we went through a period where we were doing that. If someone had an a badge, we'd probably be speaking to them. But I mean, I'll come, I'm sure I'll come on to it later, but it wasn't until, right near the close of our round where being super, super targeted for us ended up just doing wonders for our fundraise round. So yeah, but you see it all the time.
Interesting. Okay. So, and then your first conversation. So, how did you get like the first meetings? Was it mainly out of your own network, or did you go to like a lot of events or asked also other people for introductions?
So I think it was a mix. We were always told warm introductions are better than cold outreach. I don't know. I don't necessarily agree with that. One of our larger investors is actually a cold outreach from being
Oh,
super,
wow.
super targeted, and yeah, they're great. And so yes, I understand that if it comes in from someone really warm, I mean, also dependent on the investor, whether they're a VC or a family office, et cetera. But we had a mix. We had introductions as well as some cold outbound as well from introductions from both investors as well as founders. So yeah, it was a bit of a mixed bag.
This is so interesting, Jess. Would you mind to show us maybe later, because maybe I can add this resource to this podcast, like the message that you used initially to reach out to this investor called? I always love to see these
Yeah.
sequences. It's like
Okay.
so interesting. Only if you want, of course, but it would
I'll
be
have to dig
really.
it up. I don't even know what I said. It was probably something super cheesy and no, I'm just kidding. I don't yeah, I don't know what I said actually. Yeah, I'll have to dig it up for you.
That would be so amazing. Cool. So, and this investor that you then approached called, like, was this investor like a venture capital firm or like an angel investor? What type of investor was it?
They're a family office.
Oh, okay. So a family office through cold outreach. That is actually interesting. I thought like family offices are more, let's say, conservative, that they speak more to people that come from the network compared to VCs who look at all the deals.
Yeah, so the reason why I decided to reach out to them, which was honestly one of the best moves that I think we made during our fundraise, was like when it was getting to kind of us trying to close the round and us trying to fill the round. I was like, oh gosh, like we need to find someone who can just like co-invest with our current. I mean, this is something that's not spoken about a ton, but there's this whole dynamic between who people are co-investing in, et cetera. And so we were just like, we need to find someone who is excited about coming into this round and just be really targeted about it. So I like scoured Crunchbase like a hawk. Like my CIA skills like kicked into full gear, and I spent all my time on Crunchbase, which was amazing because I could see how those deal dynamics played out. And I think the other thing we saw was like an investor might say they're pre-seed or they're early stage, but they're actually not early stage. So sometimes it's also really hard to determine where their sweet spot really is before you're able to ask them all those questions. But with this particular investor, we saw that they did one deal with our lead before, and that was the reason we decided to reach out to them, actually.
Oh, that's amazing. And that means like when you looked for investors, you always used Crunchbase initially to find as many as information as possible. Is that correct?
One of the things I love to do was looking at their deal history. Because I think it says a lot about how they invest, and coming back to looking for and making sure that the investor you're reaching out to, you're in their sweet spot of. Like if you look at their deal history, you can see a lot of the size of the deal they were previously involved in, what industries they were invested in, if they maybe already invested in someone who's kind of playing in the same space as you, like all that information is in that deal history, which I thought was super helpful.
Definitely. This is absolutely like the right approach. So the filters then you use, for example, is looking for investors who invest like typical in AI related companies or software as a service businesses, and of course B2B, or did you use some other filters then as well?
I would start with like, it might have been like a super well-known investor out in the field. And then I would just look at like their specific deals, and maybe it might be a company that's in our industry or something that's more closely related to us. I would click into that deal, look at what other investors were involved in that deal, and then start to kind of map out in my head, like, okay, if they had invested there, yeah, I just kind of was like clicking through all the deals rather than applying a filter through it
Yeah.
to it.
That's very interesting. I mean, it's super time consuming, but I think this is exactly the way how it should happen. So taking the time, go through the profiles and make sure it's super relevant. And like then, if we now look at your first conversations with the investors, like, can you still remember what was like the most critical question you would ask during these first sessions?
Yeah, critical. It's hard to say like what really made a difference for them. And I will say that, so I like to compare my experience in fundraising to like, this is a horrible parallel and I apologize in advance for it, but it reminds me a lot of when I was going through Rush for my sorority. There's a lot that happens behind the scenes in Sorority Rush. And I went into Sorority Rush knowing nothing. Like there are other girls that have like letters of recommendation from like a mom or an aunt. Like I knew nothing. And I would just go in and I was like, oh, everyone just wants to meet you and be your friend, which they maybe do. But there's so much politics that happen behind closed doors. Like there are target lists that are put together. There's all this stuff that happens. And for some reason, when I went through fundraising, it reminded me a lot of that. And it's kind of like, I got comments around like positive feedback as me as a founder. And I think sometimes when I was having fundraising conversations, when I didn't allow myself to shine, like for some reason, maybe I was in a different headspace and I was like distracted by something else. And I was just like, sticking to the script. I think that hindered me from really just showing my enthusiasm and my passion for what we were building. And I would say that was a bit of a factor. Whereas, if I can just let my hair down and just like let my energy shine, that's
Yeah.
really what made a difference. So I found we had a few in-person meetings. I think that came across much better also in person rather than online. So for me, I don't know if it was a particular question. I think it was really like the energy I'm able to bring to the table and then kind of the story around the startup and the story we can tell about what we're building, how we came to the problem, et cetera, rather than one specific question. Obviously, loads of AR never hurts.
That's amazing. Thank you for sharing that. And I believe, because you just mentioned energy, and I think at the stage where you waste in the past, the energy and the connection between the founder and the investor is like crucial.
100%, 100%. And I even find, like, I met an investor recently, and we had this random connection, like, to like my dream job back in the day was to work at JP Morgan's TMT team based in San Francisco, which back in the day was the same team that worked on like Facebook's, now Meta's IPO. And we had this random connection to that team. And I think even being able to, form those connections, I think can make a difference in terms of, opening up that door and opening up that dialogue to be a bit more, I guess, personal in some ways, rather than it just like being quite scripted sometimes.
I agree. And one reason for that is definitely also startup investments are still super risky for most of the investors, especially at this stage. So I think people like to focus then more to invest in people and not the product, because they feel the energy, and the energy is like this part that shows if this person can really execute. So this is probably what happened also with the investors you talked about. Like they saw your energy and they noticed, okay, Jess will definitely be able to execute it and even overcome all the challenges that might even happen. So I would say probably the investment in the beginning goes more into the founder team and not directly the product. Of course, the industry is also important, but it's definitely a very crucial factor.
Yeah, yeah. And that reminds me of something that, you hear time and time again around like pivots are expected. It's about the team to deliver on X idea and make sure to see it through. So sometimes it's actually, to your point, more about that founding team than it is about the idea itself.
Yeah. I think it changes over time. Like for the next funding round, the focus will be a little bit different. Like people really want to see then what happened in this period from the last raise to the next one. Like how does the product look like, scalability, go to market, like what happened here basically. But yeah, like I think the first funding round is, to be honest, also like a very difficult one, probably the most difficult one ever. I hope it will get easier now for the next round.
Well, I'm excited when rounds are more about metrics. Like I come from PE world where we look at numbers, and it actually used to drive me crazy that I'm like, we're fundraising with no numbers. So I'm excited to move into more late stage fundraising because I'd love to just be able to demonstrate some numbers.
100%. And how many conversations did you actually have, for example, with your lead investor until they agreed and committed to the round?
Oh gosh. I do remember it was like near the holiday period, which was like so tricky because gosh, I think it was something like, I want to say like 4 or 5 before we got a term sheet. I think felt like a long time ago, something like, yeah. And then there were other people that started getting involved in the conversations as well. So maybe like, like around 5, I would say.
And did you go up like the hierarchical level? I don't know if I pronounced that correctly, but basically when you speak to VCs, you often start with an analyst or associate, and then you go up basically to the partner, speak to multiple partners. Was it like similar for you, or did you directly speak more to the people who are already at the top?
No, we had started with an associate
Yeah.
And then, yeah, the former of what you described, worked our way up from there.
That's so interesting. So you mentioned next week, Q3 for your next funding round, or Q2. Probably you don't have this planned exactly, right?
Yeah, around Q2. Yeah.
And what do you think, like from your perspective, must happen until this time? Like in the moment, you're probably heavily focused on your product, but also on marketing activities. I also see your LinkedIn content. You went to San Francisco
Yeah.
some weeks ago. So
Yeah.
tell us, like, what is happening right now in the background?
Yeah, going back out to San Francisco again, and we're just scouring for events at the moment where we can get in front of investors and just start, putting our startup out there. So I say we're laying the groundwork at the moment, getting like, I have a few investor conversations each week just to keep them warm, which is nice. And then we're so focused on our customers and growth at the moment because I think a big part of the fundraise is being sure we get to, our ARR targets that we're looking to
Yeah.
hit. So it's laying the groundwork in a few different ways. It's keeping those investor conversations warm, getting our newsletter out regularly so people are up to date on what we're doing, meeting new investors as well. We're attending a number of pitch events all the way up until Christmas.
Oh, wow.
Um, yeah, and then I think just, along with focusing on customers and growth, it's just thinking about what that story is going to look like for our seed raise and kind of what we've achieved in between pre-seed and seed and what that story is that we want to tell when we start to, have proper fundraising conversations.
Yeah. That makes sense. And because we now just spoke about the US and you mentioned you meet some investors there, I know we had a conversation a couple of weeks ago about different entities, like having a German entity versus a US entity also for fundraising.
Yeah.
Like, I would love to know your perspective on what do you think about the US funding landscape versus our European or German one? Like, what differences do you see from an investor perspective?
You know what? I didn't want to believe this for a very long time. So I'm actually originally from Silicon Valley, but I've spent over 10 years now living on the other side of the pond, out in Europe. And I've just had like some really harsh conversations. So my dad like worked in Silicon Valley. So he knows some people that ended up on the investing side of tech. And, I've just had people say to me, like, you're absolutely crazy for doing this in Europe. And for the longest time, I was like, I'm out in Europe, we're going to do it here. But the crazy thing is, like, we're seeing more traction on the customer side in the US, especially with AI. I mean, the kind of the energy when we sell to customers around AI is you get a bit of skepticism because
Hmm.
it's not, in some ways, people are like, this isn't proven. Like, how can I trust it? Whereas in the US, we have customers, like, we've done a bit of cold outbound and we have customers sign up for a pilot with us on the first call. And it's like,
Wow.
it's night and day, I feel like. And then from a fundraising standpoint, right? I mean, this is just my personal opinion, but if you look at fund sizes of VCs, like, I don't know, like a big fund in Europe might be a few hundred million. Whereas in the US, we're talking billions. So it's the way I think I see it is it's hard enough to be a founder. It's hard enough to be at the stage we're at where we're really, really trying to get things off the ground and really trying to make a name for ourselves. It's like, why would we make it harder for ourselves any other way if we're filling the pool in one direction? Why not just head towards that pool and see where it takes us? So that's kind of my view on it.
I agree in many points. I think like fundraising is, of course, very challenging already. And I also see that with our clients currently. So we often reach out to investors that we know from the US, but also here in Europe. And we always see so many differences when it also comes to the risk that investors want to take. Like in Germany, it's even more crazy. Like it's all about the traction. They want to hear what clients do you have and what annual revenue do you generate. But in the US, you basically need a good story that just need to be like strong enough. You need to have validated the product and then you can speak to the first investors. And this is like such a crazy difference.
Yeah, yeah. And obviously, at the end of the day, like revenue is what's going to support, that business and the growth, but it's also about like, I don't know, just being a visionary and just seeing a different future for how that product can make a difference in the industry, which I think sometimes is harder to get across in different environments. So, yeah.
But does it mean you look mainly then now, like potentially for the next funding round in the US for investors, or are you also still open or considering like European investors?
We're having a lot of conversations in the US at the moment.
Ah, that's interesting. I hope I
Yeah.
don't force you to tell anything that is still confidential.
Yeah, I mean, we're speaking to both sides of the pond, but we are having a lot of conversations in the US. So, yeah.
Okay, that's super interesting. I have one more question, Jess, and this is more also like a classical question, because I mean, like obviously you are a female founder, and this is a very important topic in the moment as well. Like there are, of course, more female founders, which is amazing, but I think there is like still a big funding gap. And now my question would be, how do you see that? Like, is that a challenge, or was that a challenge for you? Because this industry is probably very male driven still, since it's like tech related and about AI. How do you see that?
Yeah. I try not to make it a challenge and just
Yeah.
really maintain a positive mindset and just try to think about how I can use that to my advantage rather than my detriment. But at the moment, not only am I a female founder, but I'm also a solo female founder, building at the intersection of two very male dominated industries, being finance and tech. So it's, I think naturally, right? And I think, I think about this a lot as well as me as a leader and the CEO of our business. Like, how do people portray me as a woman versus a man? And I mean, there are even comments in the business that come across to me where I just sometimes think, well, would that comment be different if I wasn't a woman? So yeah, I think the biases are very real. And I think it's something that, it's just the reality of what we're living in 2025. But I think for me is, how can I tell a story? I'm very, very passionate about gender equality, for example. My last job, when I worked in private equity, I was the single female on a team of over 100 men. And
Wow.
that for me is just part of my story. And I hope that people can see that as a positive rather than a negative. And I would love to just really disrupt the gender balance within, those two industries that still continue to be very male dominated. So it should be a detriment. I'm trying not to make it a detriment. But the other thing I found is that funds that were female focused were some of the hardest to work with in terms of going through a due diligence process with them. I don't know what it is, but I found that I'd actually prefer working with some of the funds and the investors that didn't have that female focus. And, maybe this was just, the select group of investors that we were pitching to and going through DD with at the time. But it was an odd experience compared to, a traditional VC or another investor, which I thought was an interesting observation as well.
It is. That is very interesting. I actually never heard about this before. Like we also have a couple of VCs in our network that primarily invest like in female founders. But yeah, like it's interesting to hear what happens then during the due diligence process, because we did not run through this yet for any of our startups. All right, Jess, I have one last question, and this one is like the most important one.
Okay.
What would you say is like your biggest advice for people who want to raise capital? Like you mentioned already a couple of things in the beginning, but if you would just pick now one thing, like what would you recommend to founders to do to close their funding round?
Oh, genuinely, for me, it was really about just being really focused and targeted around the investors you speak to. Whenever I get an investor name thrown in front of me, I still throw the name into ChatGPT and ask it to give me a profile on that investor, because I think that that legwork is so, so insanely important. And when we were at that very, very pivotal point of our fundraise to be able to close that round, like it felt like I was on a game show, like trying to solve a Rubik's Cube in like 30 seconds or something. I was like, oh my gosh, I need to do anything to get this done. And if it wasn't for us just being so insanely targeted, like I don't know if that round would have closed. So I would say that's my biggest piece of advice.
That's a great advice. Thank you so much for sharing that, Jess. And thank you, by the way, also for joining this first episode. That was very brave from you, because I know you.
Congratulations again. I'm so
Thank you
excited
so
for
much.
you.
And I also just want to say, like, if here is like any investor who is interested to speak to Jess, reach out to her on LinkedIn. We will also put your contact details, of course, into the description, because the plan is to publish it on Spotify, but also on YouTube. So maybe he is also someone who is interested to speak to you for potential partnership or whatever. So I will definitely put all your details on the channels as well.
Sounds great. Thanks, Niclas. It was so great to see you, and huge congratulations again. We'll speak soon.
Thank you so much, Jess. Goodbye.
Bye. Take care.
That was today's episode of Deal Makers and Fakers. If you took away even one thing that you can use for your own ways, do please 2 things for me. Follow the show so you don't miss the next deal story. And share this episode with a founder or investor who needs to hear it. If you are gearing up for a serious raise and want support with your decks, with your numbers, with your strategy or investor outreach, you can find me and the spectup team at spectup.com or on LinkedIn. Thank you so much for listening. And remember, in capital raising, everyone sees the headline, but very few really see the real deal. See you in the next episode.